Good afternoon, everybody. Welcome to Trader Merlin Show for your Wednesday edition. For those of you who are new or just stopping in for the first time, today will be the last show for the week. I'm going to be in Vegas for Thursday and Friday for fun this time, not for work. I will be in Vegas for work in July. I think I've done gratuitous promotion on this one already, but I'll be there July 15th. This is the flyer for it. I'll be giving a presentation on digital assets. The title of my presentation is Filtering Chaos, How to Choose the Right Cryptocurrency and Digital Asset Investments. That's a 2-hour presentation. If you are going to go to the Money Show and sign up, the code is 065234. All right, today's show was a total about face. As I told you yesterday, I really have all these deep thoughts on Google that I want to share with you and go through what my thoughts are on Google going forward. But I figured because the court case has so much time to finally get a ruling on what is going to happen to Google, I have a little bit of time to do that. So I always like to prioritize comments from viewers that come in and make that the priority for what we talk about. Obviously, let's make this show for you. I trade every day and I'm involved in the markets every single day and even at night. But if we can make a better experience for you guys, that's what I'm interested in. So a viewer out there, this is from Daniel. I think he's up in LA. I'm not quite sure, but I think Daniel, you're up in LA. He asked some questions that teetered on the topic of creating a tariff-proof portfolio. And so I had some cool little graphics there, and I thought, well, let's go into it. So here's his exact question. Daniel says, let's hear your thoughts on so-called tariff-proof stocks. Is there such a thing? Can we, as swing traders, set up trades that won't be affected by Trump's tariffs? The real answer is absolutely no. All right, Daniel, good to see you. Thanks for the question, by the way. I appreciate it. The real question, or real truth of the matter is, everything will be impacted. It's what's the long-term bottom line impact, right? So if Trump comes out and says, hey, we're going to put tariffs back on China and make it 150% starting Friday, I don't care what sector it is, it's going to have a big swing just because of sheer shock factor. So I guess the lasting impact is what we're concerned with. And there certainly are some market segments that I think would do much better in the face of heavy tariffs. And that's kind of what I built this around. And ultimately, it's all about being very strategic in what you choose. Now, before we dive into this, let's steer our collective thinking off of one assumption. Building a tariff-proof portfolio assumes that you feel that the impacts from these tariffs is not only going to continue, but most likely get more intense and extreme. So if you have that train of thought and you're a long-term investor, certainly you might want to position yourself well if you feel this is going to be a long, drawn-out process that could get much more contentious as time goes on. If you are someone who believes that this is going to get resolved relatively quickly, let's say the next 6 months max, as I do, then building a tariff-proof portfolio will put you in investments that won't capitalize on a really big bull market run, right? Or at least not as much as those companies that would be impacted directly by the tariff. So let's start off with just some key considerations. So for me, as I was kind of thinking about this, and I talked with a friend of mine last night about it and got some extra input for my presentation today, or at least the session today. Number one consideration for me would be, I want a company that's really strong domestic revenue, right? A company that does a majority of its business in the United States. And that's actually not that hard to find. You can do all kinds of searches and talk about companies with the largest U.S. domestic revenue. And it was interesting because I'm sure that some of you right now could very quickly name a company that gets a majority of its revenue from domestic sales. One that comes to mind, probably one of the largest retailers in the world, would be Walmart, right? And this is where you have to be careful because while they get a ton of revenue from the United States, their business model is fundamentally impacted by tariff increases. Obviously, a lot of stuff they get from China could have a significant rise in price, and therefore they pass on to consumers. And then does that mean that we as consumers purchase less from Walmart? So when I look at strong domestic revenue, Walmart is not on my list. And I'll run through a list of different things here to explain these market segmentation pieces a little bit better. So number two, I think minimal import, I didn't mean resistance, I should say reliance. I was quickly typing these things out, so my apologies. Let me change that real quick because I want to make sure that the text is actually accurate on your screens. And if I do have issues today. My apologies. That's my graphic stuff for the day. I don't know what my PowerPoint just decided to fail on me. So let's get this right out here. And let me make my changes to this one. Hold on. We're almost there. ID10T problems. This one's not network. This one's actually all me. We'll talk Reliance. And it seems like the chat is not working today, you guys. I don't see any chat coming through. Either that or you guys are just not interested in the topic, which could very well happen. So we have strong domestic revenue. We have minimal import reliance. And then I think an easy one would be something like defense. Supply chain, very important. You know, big up, especially when you look at these companies, you go, oh, okay, they do a ton of, all their business is done in the United States, but the products that they get might be international. That could create problems for U.S. Any supply chain disruption could obviously be a big factor there. So when I look at this, those are kind of the three cornerstone pieces I'm looking at. Steven says, I would think grocery stores may have one of the least impacted people. Yep. Housing and food, right? Housing and food. So certainly when you look at, I would almost argue that that's a defensive sector, not as an actual military defense, but like it's a defensive sector because I'm probably actually going to use more grocery stores. I mean, think about it. If times are good, we eat out a lot more. And actually, one of the stocks I have on here is Texas Roadhouse. Absolutely booming. I was thinking about it because of Larry's presentation or talk about it last time he was on and my recent experience at Texas Roadhouse. Other than the fights you see on social media, that place is absolutely packed and mobbed and very recession-proof. However, if a recession, tariffs, etc., start to impact the economy, maybe people will spend a little bit less. And if I shift away from restaurants, I'm going to grocery stores. So I totally agree with you, Stephen. I think grocery stores would be a great one. So Kroger's would be a good one to throw on your plate there. And there's a bunch of other regional grocery stores. So specific sectors. I talk about defense, military spending. So you're talking Northrop Grumman, Lockheed Martin, Boeing, those types, probably going to do fairly well. Now, some of their exports may not do as well, and that may hurt them, but typically defense spending is going to continue. We have utilities, which I saw Andres put on there. Absolutely. I'm not spending less on electrical. I'm not going to go out and, I got to cut back my energy bill. No, if we go through a tariff war and things get really contentious and we're putting 100% tariffs on China and Canada and Mexico, I'm still going to do my show. I'm still using all the lights I got and all the production equipment. So yeah, I'm not spending less on electricity. And my gas and heating bill are all going to be the same, not more. Utilities definitely on the list. We'll run through some of those utility companies out there. Actually, I guess I could do that right now. Since I'm on that topic, let's go into utilities. Now, what utilities? Duke Energy is one that comes to mind. This is one of the larger, domestic energy producers out there. The chart doesn't look that great. Really been kind of sideways choppy since middle of 2024. But Duke Energy could be a play there. If you felt that tariffs are going to continue to be a big issue, you have things like SRE, which I know some of you guys are into there. Sempra Energy, which had a pretty bad earnings announcement 2 quarters ago, now recovering fairly nicely. Probably will close that gap here in the next few months. That gap goes from $77 all the way up to $87, another $10 move there. Local utilities, always an important one. This is kind of more national. You have AEP as well, which is American Electric Power. These are some of the major names, right? Obviously, there's local utility companies as well, but I'm going for the big publicly traded major names out there. ETR, which is Entergy Corporation. Now, this one, just because of its domestic production, and I like it, but the chart looks pretty bad. It's been completely sideways for the past few months, really all of 2025. So again, this does not constitute a buy recommendation, just saying some of the leaders in those areas of utilities. And I thought I was Googling Clearway Energy, and I can't remember why this one popped on my list, but I was looking at Clearway Energy too, which is CWEN, but I can't remember my logic behind why I wanted Clear Energy on that list. All right, so that was utilities. Healthcare. And healthcare is a big one. Obviously, I'm not going to spend any less on healthcare. If I injure myself, I'm going to the hospital. I guess the key is what hospitals or healthcare entities have a reliance on foreign supplies. And in doing some research, I was surprised to find that one stock that I'm currently long on, United Health Group. United Health Group International or Incorporated is a very good business in that model. Very little reliance on imports. that one came to the top of the list as domestic revenue focus and somewhat recession and tariff proof. So you just got to be careful with this one because they have had a ton of problems recently. You've got class action lawsuits and CEOs being murdered. This one's a very, very high risk healthcare play. However, it's on the list. I also put CVS on here. Margaret says a dog with fleas. Well, I love the analogy, a dog with fleas. However, fleas can be very easy to get rid of, right? And at some point, when we look at that UNH, at some point, UNH will be a buy. Is it right now at $300? For me, I am thinking that $300 is okay, so I'm long from 300. Is it 200? Is it 250? Is it $100? Right? There's certainly a point where United Health Group, you go, it's a screaming buy. It's worth its assets. It certainly has some problems, but at some point, its value will be less than the share price, and then someone will come in and buy the whole dang thing up. So yeah, fleas are good. Steven says UNH revenue is second only to Amazon. I did not know that. That's a pretty phenomenal number from the movie Wall Street. Got it. All right. So there's certainly a lot of different healthcare companies we could go into. I was also thinking locally around me, like things that I need. And, if let's say I get COVID, which blessed I've had a few times, I always immediately need to have my Advil, Tylenol, Theraflu, my Ricola mints. And where am I going to go get that stuff? There's nothing's going to stop me from going down to CVS and buying those goods, right? It's just right down the street. I guess you could look Rite Aid and Wall Street's Boots Alliance, but CVS to me is a much bigger player, at least here in Southern California where I'm at. To me, that's something that you and I are probably not going to second guess as, I need to go get some, makeup or some medical supplies or even pharmacy stuff very, very quickly, huh? Uh-oh. What did you say huh to, Big Eb there? What was the huh to? CVS, man. I know the company may not be your favorite, but we're all going to need those things every now and again, those quick supplies, and we're not going to skimp on those ones. What else? There were a bunch. In digging to kind of find which ones were really good domestic ones, McKesson is another company that came up in that medical space that's domestic, which I thought we could add on there too. Who makes the worst calls, Tom Lee or Jim Cramer? Well, that was a total squirrel right there, Margaret. But who makes the worst calls, Tom Lee or Jim Cramer? Tom Lee only says one thing. The economy is going to crash and Bitcoin's going to go up. Jim Cramer says all kinds of stuff that I think that he is paid to say. I think that there's an incentive on his part to promote certain stocks, just having experienced what goes on at CNBC, where you get punished if you say something that is wrong. So for me, I would probably say who makes the worst calls is Jim Cramer. At least Tom Lee's consistent, right? Jim Cramer's all over the place and he'll flip-flop, and I think there's an ulterior motive with Jim Cramer to, boost the shares of his charitable trust, etc. Exactly. Tube Top says just to the opposite of what Cramer says. Long before there was an inverse Cramer ETF, we're talking 15 years ago, I built a portfolio of stocks that were opposite of what Cramer says, and it's done remarkably well. And I've done it multiple times to do the opposite. But now I think people have caught on with that. Let me see here real quick. Let me see if I can go out to FinViz real quick. Since FinViz has one of the best screeners and filters out there, let's see if I can sort this by revenue. Just curious, out of all the stocks out there, we want to go to a fundamental here. Just make sure. Let's see if I can put on revenue on this bad boy. Return on assets, payout, dividend, earnings, revenue, surprise. Jeez Louise. I'm going to do a control F and see if I can find revenue. Because that seems crazy. It says, that seems like crazy. It's only second to Amazon. Trust but verify, right? There's only one revenue there. Earnings surprise next to revenue, but it doesn't give me that one. I wish I could find that. Return investment, gross margins. No, none of this stuff is going to give me that number that we want. Revenue. I'll have to look. Man, that's a pretty crazy stat, Steven, if it is. Monster money. Great money. Anyway, let's go back to this because I want to make sure I get through it all today. So healthcare, obviously a pretty important segment of this. I also think that insurance plays a big factor here. If there's a tariff war, I'm probably not going to cut back on my health insurance, my homeowner's insurance, my renter's insurance, whatever insurance I might have. So I would think that insurance companies would do rather well. So that brings up, it also depends on what kind, like Chubb would probably be a good one because that's one of your largest property and casualty insurance ones. Let's go put that up here so you can see the price of Chubb. Let me get the ticker symbol is CB. Right, so here's Chubb, which also seems to have been struggling in the past since September of last year, really not going anywhere directionally, but overall, long term, this chart looks fantastic. If we look at other ones like TRW, Travelers, TRV, come on, TRV, there's all sorts of other insurance companies. They seem to be doing rather well. I don't think we'll see any cutbacks in the insurance segment, so you could do a lot of different... Oh, thank you. I got my research team is killing it. Margaret says, ranked by fiscal year 2025, Walmart, $681 billion, Amazon, $638, United Health Group, $400 billion. So still, that's a pretty amazing number for a stock that's been down 50%, right? At some point, that's just nuts. No surprising that Walmart is near the top. State Farm, sure. I don't know the ticker symbol for State Farm because I don't look at State Farm, Sprouts. I don't know, it's State Farm. You could certainly look at Metropolitan Life Insurance as well, MetLife Insurance. There's all kinds of different insurance companies out there. I would probably go with Chubb myself, just because it's one of the largest ones out there, and Travelers would be good too. Other market segments. And we'll get to other ones you guys want to add in here. Here's one that I was trying to think of what is not going to be impacted. And one that popped up to me, at least domestically, was tobacco, right? We don't import a lot of tobacco. Well, tobacco is grown in the United States. Now, there are some companies out there that do import tobacco, and I pulled up to see which one has the largest domestic production, and it's Altria, MO. Right? So Altria shows very highly on the domestic production, really no reliance on international. My only concern with Altria might be, and I don't know exactly the numbers here, is what sort of exports are impacted here. If the tariffs are reciprocal and Altria is sending tobacco products internationally, how badly do they get hurt, right? How much is that going to attack them? You also have Philip Morris, obviously, major tobacco makers. And, one of the things that is interesting, and some of you might be victims of this as well, we always see these trends that happen. And I remember when I was a kid, pipes and cigars were a big thing, and then it was cigarettes, and then now it's vape pens, and now it's these Zyn packets. You know who makes Zyn packets? Philip Morris. They're crushing it, right? Yeah, don't forget booze, my man. Yeah. I guess where do we go with the booze manufacturers? There's definitely food producers out there and booze manufacturers, but yeah, alcohol, absolutely. You got to go to your vice stuff, right? Alcohol and cigarettes. Well, tariffs don't necessarily mean that times are tough. It just means they're uncertain, right? If we have tariffs, it means we have this uncertainty with regards to price. And maybe it does impact by our inflationary numbers and the prices increase, so we spend less. But does it necessarily mean tough times like, we're in financial despair? Not necessarily. No Las Vegas theme today, Tube Top. No. It just happened to be, this is a great question from Daniel. And, it's one of those things that as a trader / investor, I love these types of questions because it requires you to think outside the box and go, okay, I'm not just jumping on a trend, but I need to think of how these major macro events impact companies and impact their growth so I can now maybe get on one that's beaten down, downtrodden, or undervalued and capitalize on those moves. I think, to be fair, if we're looking at building a long-term tariff portfolio, that ship has sailed. I think the lion's share of the damage from the tariff issue is done. All right, and then I put here domestic production. Domestic production kind of being the last one, meaning companies that do things in the United States. And one that comes to mind would be like Nucor Steel. The other reason I bring up Nucor Steel, which is NUE, which doesn't look great right now, I mean, it's been on a pretty big downtrend, is Nucor is predominantly U.S. steel production. And what's interesting about that is you have the man, the myth, the legend, Mr. Cheeto, putting on a 50% tariff on imports of aluminum steel as of yesterday, May 30th. He announced it May 30th. It went into effect today. So here is a direct response to a tariff issue where Trump said, hey, 50% tariffs on aluminum and steel. Therefore, those commodities are probably going to move up for domestic producers. So you have Nucor. You also have U.S. Steel, which of course now is doing a deal with Nippon Steel. But here you can see last week, it was May 23rd, or sorry, 2 weeks ago, May 23rd, U.S. Steel had a huge pop-up here. And they're a pretty big domestic steel producer. So there you go. That was the last one on there. I think I brought some other ticker symbols here, but I can't remember. TXRH? Oh, yeah. I put Texas Roadhouse on here because I was looking at that chart, and it's done remarkably well over the past couple of months. I mean, Texas Roadhouse, back in April of this year, was down at $148, and it's already at $195. So you're talking a 33% gain in just a little over a couple of months. Pretty phenomenal there. So Daniel, that's how I would build it. I would sit down with the list, if you will, of these market segments right here, and I would do a deeper dive. And I don't have time to do that. Alcoa, absolutely, Judy. Alcoa, one of the leaders in aluminum. I would look at these sectors, and then I would look for a couple things. Number one, I would dig deeper into them and seeing which ones have the biggest international exposure, whether that's imports or exports. If any one of these had big exposure there, I'd remove them from the list, right? I want to keep whatever I'm buying, whether it's defense or healthcare, insurance, I want to as much locked in the U.S. borders as I can. And in some cases, they might even benefit more from tariffs, like domestic production companies. I mentioned Nucor, U.S. Steel, or other companies that do domestic production. Alcoa, you mentioned here. But those companies also have to get some of their raw materials from other places. Now, where do we get a bulk of our aluminum and steel is from Canada, I believe, is one of our major partners there where we import most from. So we need to get some of the raw resources from other countries. Does Nucor or does U.S. Steel bring in those raw resources from other countries? If so, what percentage of the revenue? And that, to me, is just the little tiny stuff you have to think about when you're looking at building up these portfolios. Even with this portfolio, we should have stop losses. I would say so, yes, absolutely. My big concern in building out a portfolio like this, if you built this out and you're like, okay, I'm protected. If Trump goes absolutely nuts and drags on this tariff war for the next 4 years or 3.8 years, whatever he has left, this would work great under that scenario. However, if it gets all resolved, the equity markets are going to scream to the upside, and these will most likely go down. So again, we have two different things here. If we get some resolution to all this and clarity, and Trump clears it all up, and we've got deals with China. Of course, he said today that China's been very hard to deal with. Well, obviously, so are you, President Trump. You're no peach yourself. I'm sure there's a lot of animosity between the two countries there. If that gets resolved, like I said, things will fly. If it goes on and on, these may be actually shorting. If it gets resolved, these could actually be shorting opportunities. So just things to play. Nice, Daniel. There you were ahead of the game on that one, or at least ahead of the show, as far as what I was showing you today. So, Daniel, that was my real quick and dirty. I could go much, much more in detail, but I did not have the time to do a lot of research. I actually just sat around and was discussing with some friends of mine, and thought I would steer the show down that direction today, because as time goes on, we'll always have some macroeconomic event, whether it's tariffs, whether it's terrorism, inflation numbers, all of that should be driving your long-term investment portfolio. Now, to be fair, I did not answer Daniel's question, because Daniel's question was not about building a long-term portfolio. It was more about short-term. As he says here, is there such a thing? Can we as swing traders set up trades that won't be affected by Trump's tariffs? I initially somewhat answered that. In my opinion, I don't believe that there is a trade that you could set up that is not going to be impacted in any way, shape, or form. Even looking at things like the buying just treasuries might be impacted by tariffs, because the tariffs could lead to higher inflation. The higher inflation could lead the Fed to start to raise the short-term interest rates, and therefore your short-term treasuries you're buying are going to be going down in value, depending on how you roll them. So I don't think there's any market segment that you could get into that won't be impacted from an announcement, that initial shock. However, if you're looking longer term and you have a belief that these things will be happening, you could Netflix. I didn't even go into there. Netflix, certainly. I don't know what it is, and it's just me. Obviously, you guys know that I'm not a huge fan of Netflix. I'm like, I look at how much competition is in this space, and I am just dumbfounded that Netflix continues to rally like this. Now, we know they switched their subscription service where you can't now use different IP addresses, and they're locking down on sharing of accounts, which everybody did. But I don't know. I guess I just watch less and less TV. I realize that the more TV you watch, the more you're wasting your time on useless stuff that doesn't benefit you intellectually in any way, shape, or form, unless you want to know what the Kardashians are up to with their scripted drama or just the trash that's on TV. So I don't know. I personally couldn't bring myself, Oliver, to buy Netflix just because I don't know. I don't believe in TV. Andres brought in an earlier comment here, not fart coin, but the other question there would be something that might be somewhat recession-proof is crypto. Now, not necessarily that it's recession-proof or tariff-proof, but I'm just looking at the headwinds that are happening. For those of you who may not be paying attention, that Genius bill we talked about a couple weeks ago, or maybe last week, I lose track of time here. The Genius bill is getting pushed through. I was hearing an interview with Cynthia Loomis today, and she says that next week we should get this bill signed, which will be clarity for stablecoins. Once that happens, guys, crypto's going to start to run. And then right after that, this is where it gets really interesting, and it'll probably be the longer process, is when we get the clarity on what is a security, what is a commodity. Meaning what gets regulated by the CFTC, what gets regulated by the SEC, and what are now the requirements for all those crypto projects to abide by. I have a feeling that once that gets close to the finish line, the regulatory aspect of what's a commodity, what's a security, it's like the tide going out, and a lot of these garbage meme coins will have massive capital outflows as people realize that they're probably going to get banned on U.S. exchanges, and other securities will, cryptos will as well. And that money is going to fly out of them and go right into the ones that have already been approved. What's the number one that's been approved? That's Bitcoin. So I think this could be that little catalyst for a bull market run going into the November highs, which I still am on track for at 250,000, even though we look at that price chart and it's just kind of floundering. It's got a nice trend for the past 2 months, but here we go, just sitting at 105. Nothing too exciting. Glenn, I'm going to go with the squirrel right here. CarMax, I don't either. I don't get CarMax either. Oops. I forget the ticker symbol. KMX. I always put CMX. CarMax. It's not. No, CarMax isn't the one. It's Carvana. Yeah, there's your CarMax. CarMax, whatever. I understand their business model, but it was Carvana. Carvana, CVNA, which was the chart that was just absolutely unbelievable. And now it's back up to these ridiculous heights. We were talking about, I believe we were talking about this back in 2020. I couldn't have been. Now it's just, I feel like there's manipulation going on with Carvana. It's unbelievable the way this thing works. And Carvana is CarMax, but with little vending machines for cars. Kind of silly. That makes sense to me. Anyway. What was it? And the Trader Merlin people in America are glued to two things: social media and Netflix. That's true. That's true. I was out. I went out to visit a friend of mine, and she's having a tough time, and she starts talking to me about all these shows that I have to watch. And she's like, "You got to watch this show, and this show, and this show, and this show, and this show." And I'm like, "I don't care. Stop. I don't watch those shows. I'd rather sit and learn something, whether I'm typically most of my time will be on not social media, but on YouTube, or diving down rabbit holes of education and learning things about something I'm very interested in, or just improving my mindset as opposed to wasting mindlessly watching TV. Now, to be fair, when I go to bed, I always watch TV, but it's on in the background as I play games. So, Tony, this is a good question. What do you think about the stock MU. So when you look at the whole chip space, it's really kind of unfortunate as how beaten down Micron has become. I mean, this one is just crushed. And if you look at, let's overlay SMH, which it is a member of the SMH, which is a semiconductor ETF. Clearly, Micron is doing much worse than the SMH, which is the ETF for semiconductors. And real quick, let me, while I have it here, let me bring up the SMH so we can see the weightings, because this will be kind of somewhat telling. We'll look at bar chart, who has a great ETFs filter here. We'll go SMH. Okay, that's the VanEck ETF. There are several other semiconductor ETFs. This is just one of the bigger ones. And I'm going to go look at their constituents. So Micron, even though it's a part of it, is way down this list. It's 4.19%. If you look at what's the lion's share, NVIDIA is literally 21.5%. 21.5% of the semiconductor index is NVIDIA. That's just insane. But you have Taiwan Semiconductor at 11.3. You've got Broadcom, which reports earnings tomorrow, I believe. That's 10%. ASML, these are all now 5% or less. Qualcomm, AMD, Applied Materials, Texas Instruments, Analog Devices, KLA Tencor, and then Micron. So it's certainly weaker than the industry average, which I'm not a fan of. I think that Micron kind of missed out on the whole Chipmaker Act. You know, the companies that really benefited from that were Intel. Intel got billions on that one, but look at its performance. I mean, it is colossally underperforming the market, performing the semiconductor index. And you know, the problem is NVIDIA has been the one that's dragging the whole index up, right? Let's just go to the beginning of the year. Let's go to January. There you go. So for the year, NVIDIA actually is underperforming the semiconductor index. Let's see what happens if I get to, let's look at Micron. For the year, Micron is actually outperforming. That's interesting. Performing the SMH, meaning the semiconductor index. But on the longer haul, you know, NVIDIA is just bringing this whole thing up. Honestly, I think that if you're looking at a semiconductor index, it's dangerous to be buying SMH because it has such a reliance on NVIDIA. And this is why I think it's important, if you're looking at ETFs, to look at the components, the weighting, so that you don't get caught with an over-dependence or reliance on one company. In this case, NVIDIA is really dangerous to that SMH. So as far as Micron goes, you know, I have a friend that works there and he raves about it, loves it, thinks it's one of the greatest companies on the planet. You know, I think they're a major player in this space. They've had a great run over the past, well, since the end of March. So it's been a couple months of real big rally, but so has pretty much all of tech. I don't think you can go wrong long-term holding on to chip makers, except as the room says in here, you guys are against Intel. I was bullish on Intel at that $18 mark. I've been saying it for a while, and it's just long-term Intel was going to make changes, right? There was talk about them replacing their CEO and shifting their model and splitting their company. Then they're going to let that CHIP Act money. And as Steven says, Intel got billions and still sucks. I hate to agree with you, Steven, but I think you're still right. I just don't understand how you could be that blind and oblivious to the trends of society and not make fundamental changes quickly. Yeah, I'm sorry. I hope you're selling some covered calls against it at least, right? It's not like it's going anywhere, so just sell the 25s or something and just keep sitting there and lower your cost basis. Marcus, a plot of relative strength would be more useful for trading purposes. Well, I mean, that's just a relative strength against the broad market index. If you're using, when we say relative strength, Margaret, are you talking relative strength against itself, like an RSI, or relative strength against another company? That's kind of why I brought up the SMH, to show its relative strength to the overall broad market sector of SMH. Glenn, I'm bullish on Intel, but it just can't seem to get its head off $18. It's just like sleeping on that one. What about cloud server companies? Well, I guess with the big ones we could look at, there's many of them out there. I mean, obviously, you look at most of the major tech companies and they're in that space, like IBM. But remember Snow? I was talking so much trash about Snow back when it IPO'd, saying it's going to be under, I said it'll be under $100 within, I think I said 90 days or 6 months or something. And we never got there. We actually did get close. We bounced off 100. That was like the lowest it's ever been. There's a lot of companies out there in that cloud space. Obviously, Amazon is one that you can't argue with. I think Amazon is number one from a lot of different perspectives, just because of its retail dominance, but also the barriers to entry that it creates for other companies. And I think that it'll start to get into more and more businesses. There was talk for a long time, which I know they do sell cars on Amazon now, but I think all of us would agree, unless you're a car salesman in the audience, I think all of us would agree, if the process of buying a car was just simply, this is the price you pay, and that's it, as opposed to having to haggle with the salesman and get the sprayed undercarriage and floor. They're always trying to sell you something. I hate the process of buying a car. Amazon had it where I think it was Hyundai. You could buy Hyundais, just click a button and go. And same thing with Tesla, right? Tesla is just, here's the price. There's no negotiation. Love it. Rob says NXPI. I don't know NXPI. Oh, NXP Semiconductors. Look, semiconductors are going to drive the planet. They are driving the planet. They're driving all growth. Every tech company is reliant absolutely on semiconductors. So I think building a portfolio, and I don't know specifically which one will be the king, but I would certainly want to have exposure to semiconductors. And that's why I brought up SMH as an easy one, but there are others that might be more diversified. Now, as far as TXN, the only reason that I am anti-TXN, and this is silly, it's just me, Rob. Only reason I'm anti-TSN is I cannot let my mind go of what Texas Instruments is. And when I was a kid, the only thing Texas Instruments made was calculators. And so my brain, I'm like, okay, I know that this is a problem with me, because Texas Instruments makes all sorts of different products and services. So I don't know enough about their business, because for some reason I've just kind of blacklisted it, never bought it, never traded it, because I just think that they're calculators. Kind of like Hewlett-Packard. I think Hewlett-Packard kind of like, exactly. Steven got it too. For some reason, I can't let that out of my head. Who needs calculators anymore? I've got something that's just as good as their calculator here in my hand. But for some reason, you have these, your brain won't let go of something. And I just don't understand why, but Texas Instruments is one of them for me. Medical devices, makes sense. Transition from calculators to medical devices. Go where the money's at. CrowdStrike may have been an opportunity to buy, but it's spendy still in my book. CrowdStrike, great company. Now, CrowdStrike, on their earnings announcement, they got beat down pretty bad. But, if you notice what happens with their earnings, it seems to be a common theme, that they'll sell off for a few days, and then they have a pretty significant rally. So here is their last earnings. They gapped down. Actually looks very similar to today, except we're in an uptrend now. They gapped down on their earnings, and then sold off, and then started to rally. Let's go back to the one before that. You had a 2-day sell-off on earnings, and then they started to rally. So maybe if you're looking at historical precedent, which here's the same thing back in August of 2024, it actually gapped up on earnings, sold off 3 days later, and then had a significant rally. So maybe you're looking at wait a day or two on CrowdStrike before jumping back in. But the chart of this one's been just screaming to the upside. You guys might remember back here on the show, I had sold a whole bunch of puts on CrowdStrike, which I got exercised on. I believe it was 220, and I ended up selling like the 260 calls. It ended up being a great trade back last year. But, in hindsight, I wish I would have held it. It would have been a much bigger profit for me, because I had quite a bit. Let's see, what do we got here? Mick, good to see you. Will receive my first Misty distribution on Friday. Wow. You got 13,400 shares. So maybe we should do a special on MSTY and what it is. You look at MSTY, and basically all this is a synthetic long position for MicroStrategy. Right? That's all this is. So they've been paying. Oh, not MSTY. Get the right MSTY. Play Misty for me. This is the Title Trust 2 Yield Max. And there's a lot of different ones like this, but it's an option strategy. You're not looking at the price. The price is not that relevant. It's really the dividends that this thing pays. They paid a $2.37 last month. The month before that, they paid $1.33. Last month before that, $1.37, $2.02 or $2, and then Mick says they just reported $1.47 yield. They're paying phenomenal yield, right? And you have to understand what they're doing. They're doing essentially what I'm doing. And what I'm doing is I'm actually selling puts to collect a premium on MicroStrategy. If I get exercised, I then sell covered calls against it. What Misty is doing is doing a synthetic long position. So it buys long calls, and then it will sell calls against that position at a higher strike price and collect extra premium. So it works great unless there's a significant fall in the price of MicroStrategy. The other side of it is you're limiting your upside potential here with those covered calls on your synthetic long. So I like doing it manually. How long will it last? As long as the premium and the implied volatility is high for MicroStrategy. If that premium starts to drop and go away, then you're not going to get that sort of yield. The biggest risk to you would be a substantial fall in price of MicroStrategy. And if that happens, you'll lose and you'll be talking about the premium, but the underlying will have diminished so much. And if we add on, let's just add on for fun, MSTR, Misty, let's just go to the beginning of the year. So there's from the beginning of the year. Misty been doing poorly, down 20%. So you've lost 20% of on the premium on the price you paid for MSTY, but you've collected a lot of premium along the way, right? You've collected tons of premium. However, if you just held MicroStrategy, you'd be up almost 30% for the year. If you go back a little bit further than that, let's go back, let's say since inception. Since inception, if you just bought MicroStrategy and held it, you'd be up 440%. You'd be up 12% on MSTY. However, you have to add in all of that premium, which would give you probably a few 100% rate of return, so they'd be fairly close. For me, I'd much rather just buy MicroStrategy and sell cover calls against it. But Mick says, which means Bitcoin has to crash to end of the world. Not necessarily. Remember, MicroStrategy holds a lot of Bitcoins, but now what you're getting with MicroStrategy is this creation of several different financial products kind of leveraged on top of each other with all their different bond products and offerings of perpetual preferred shares, etc. They're locking themselves into all sorts of financial commitments. And if there is a drop in the price of MicroStrategy because of maybe they have to deleverage some of their position, I think that Bitcoin's going to continue to move up. But if it does drop to certain levels, MicroStrategy may be forced to sell some of their Bitcoin, and that could cascade into a much bigger sell-off. In my opinion, it's setting up for down the road to be a potential black swan event. Mathematically, by the chart patterns, Bitcoin has a 70 to 80% fall in value at the end of the 4-year cycle, and that 4-year cycle ends in November. If Bitcoin has a 70% fall in price, I'm pretty sure Michael Saylor will be underwater on several hundred thousand of those Bitcoin that he's purchased. And that could force him into massive liquidation. That could collapse MSTR, MSTY, the preferred shares. So certainly as this Bitcoin rally continues and that 4-year cycle, if it does start to come to fruition, you might actually look at shorting MicroStrategy, because that could be, in a crazy world, it could be the thing that sends MicroStrategy to zero. And I'm not trying to be doom and gloom here. It's just knowing, we all know Michael Saylor is leveraging. He's borrowing money to buy Bitcoin, borrowing money and doing over and over and over again. That's great when things work in one direction. Look at the housing market crash of 2008. Watch The Big Short. I love the scene where they talk about the stripper, right? Sorry, the exotic dancer. And she's like, oh, I've got like 6 houses. And she's just taking her earnings, going to the bank, saying, here's $20,000. I'm going to pull out a $300,000 loan and buy a house. And she's like, I got so many homes. It was all leverage. And as soon as there was a pullback in it, if you're over leveraged like MicroStrategy I think is, it could cause a pretty significant cascading sell-off. So I, for one, hope it doesn't happen, because that would be, I think, catastrophic for crypto in a sense, because it would create all this panic and buying opportunity. But look, I'll tell you, if we get to 250,000 on Bitcoin in November, and I liquidate my crypto, which is the plan still, and we see Bitcoin start to sell off a little bit, I will be going short MicroStrategy. I'll buy directional puts. I'm going to buy outright or short outright. I'll short MicroStrategy. And if that does happen, MicroStrategy is going to go to single digits. Right, Tony? Good to see you, Tony. It's a great scene, and it does speak volumes about the risks of over-leverage. If you're over-leveraged, it's wonderful when it's working in your favor, right? I'm sure you guys have been through Trading Academy classes, and we're always cautioning people on the use of margin, yet it's so hard to convince a doe-eyed newbie, this wide-eyed, like, oh, wow, margin? I have $100 in my account, and I can trade a $100,000 currency lot. Like, oh, God, you're going to lose everything like that. When it works in their favor, they keep doing more and more exposure. And right now, Michael Saylor is enjoying pretty significant exposure. Juan says, so would BITO be an advantage over MSTY? BITO is working directly off of Bitcoin. So as Bitcoin goes, no, I would run away from BITO. Run away from that one. Just run. Here's why. Let's get rid of that one, and let me put let's put BTC USD on here, right? So here's Bitcoin, and let's put on BITO. So here's your BTC. It may not do it because this has a 24-hour chart. And you're looking at these two things. Why aren't they identical? Right, Juan? Why aren't these identical? If BITO is supposed to be Bitcoin, why are they not identical? Because BITO is a futures product, so you got rollover and contango effects. So over time, it's going... When a futures contract expires and the next contract is more expensive, you're missing out on gains. So absolutely not should you be in BITO. I say you run away from BITO. What you should look at would be something like, let's do the overlap here. Let me delete this one, and let's put on IBIT. So IBIT is BlackRock's ETF. This actually does hold the shares. And notice the correlation, right? IBIT is lock stock with Bitcoin. Why? Because it actually owns Bitcoin. IBIT owns Bitcoin. BITO does not own any Bitcoin at all. And they could be managing BITO incorrectly, but it has a lot to do with futures, right? Because you buy a futures contract, and let's say you're doing an S&P rolling fund like this. You track the S&P, so you're buying the S&P for September. And as it gets close to the end of September, you're like, I need to buy the December contract, right? But people are already expecting in December the prices are much higher. You have to buy that contract at a higher price. Therefore, you lose out on the gains. So, yeah. Juan, if you didn't learn anything today, it's stay out of BITO and the BITO dividend. You're going to make more on the underlier than you will on the dividend. The contango effect. So, BITO does offer a dividend. You're right. But, yeah. Don't worry about dividend. I want the underlying. Keep going. All right. And I was planning on doing it so early today. Let me run through our markets just because I got to wrap up. I got things to get ready to. I got to get my stripper outfit. So you guys know I'm entering in the world stripper competition, pole dancing competition. So that's why I'm going to Vegas. It's a pole dancing competition. I've been working out. I'm ready to. I'm just kidding. Sorry, ladies. No, I'm not. Don't worry. There's no stripper competition. Markets, let's talk about it. The 10-year yield did something very interesting today. It broke that trend line, and it did it aggressively. I was really feeling confident that this 10-year was going to keep drifting higher and higher and higher. Today, big drop down in that 10-year yield. Dropped 2.27% to 4.35 yield. It's still in an uptrend, right? We're still... No videos. I'm just going to be going to see Kenny Chesney at the Sphere. I'm going to a country show at the Sphere. I guess my goal is to see every artist at the Sphere. BITO to taco. You guys are good. It's good stuff over here. So this is interesting that trend line has broken. We can remove it. It still doesn't change the fact that we're making higher lows on the US 10-year, but the trajectory certainly has changed now. It's starting to look a little bit weaker. Bitcoin, it was looking nice last night and then gave back a bit of those gains, but still holding. Again, I don't have any worries about Bitcoin until we crash down below that box. Now, on the futures, that box is between 101, call it 102,000 and 104, and we're currently at 105.5, right? So we're still good on the Bitcoin thing. And again, we have major news happening probably next week with the Stablecoin Act or the Genius Act going through. And then the next bill comes. And that is really the piece that's, I think, going to be the huge catalyst for some cryptos and an absolute butcher knife for others. We're going to see a lot of cryptos disappear once the government says, here's the rules behind what's a security, what's not. When that happens, man, Be very careful on what you're holding for you crypto fans out there. There's going to be a day of reckoning for a lot of different crypto projects. Moving on to sixth place, crude oil. It's still holding right at that neckline on this inverted head and shoulders. So everything right now is still as it should be. It's still in a downtrend overall for the intermediate term from January, but coiling like a snake, ready for a breakout here to the upside. My guess is it will probably break and shoot straight up to this downtrend line, and then the real fireworks will happen. Dollar index, drifting lower. Nothing's changed, right? I still am looking at that baseline yellow box, which is bounced off back in mid-May, right around $98. We'll keep that there, and that's no change here. Russell 2000, as we get close to the top 10, again, nothing's really changed here, right? The downtrend line was breached, but just barely. It's still holding on to it, but it's also into that overhead supply. I think I even talked about this last week, that we could probably see another challenge of that overhead supply. This does look really good from a long perspective, right? Buy and long here because higher lows, it's smashing its head against the high here, which in that yellow box is 2105 to 2125. That to me looks like an ascending triangle ready to break out. Some would call this a cup and handle pattern, but inverted head and shoulders, whatever you want to call it, right? We could stretch this box out here and go back a little bit further, and now it looks like an inverted head and shoulders. Either way, it's coiling. It looks like it's starting to move to the upside. Top three, podium. Dun, 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 dun. We're still negative. S&P on the day, I'm going to call it unchanged, down 0.01% for the futures. You've got hesitation, but also it's right at that 6,000 mark. I mean, if it breaks, I think you're going to have a very fast pop to the upside here. What would cause that pop? It would be something with Trump saying, guys, today we've reached an agreement. Guys, today we reached a wonderful agreement. It's a beautiful agreement. Nobody knows agreements like I do. With China, it's wonderful. It's huge. This is great for us. And the markets are going to go, pow, and scream to the upside. I think that day is coming. Is it tomorrow or Friday? Probably not. But the coiling here just makes me feel much more optimistic on this bullish market. It looks pretty good right there. Second place, NASDAQ, 0.28% slide. This one's looking best of all of the indexes. Why? Because it's making higher highs, higher lows. Right now, we are zeroing in on all-time highs for the NASDAQ 100. I don't see anything to stop this train. It's money pouring back into tech. And finally, gold. Since we had some downside movement and scares of tariffs today with that 50% tariff on aluminum and steel implemented today, gold taking a little bit of a pop-up, 0.65%. Still a nice trend for the past month, but sideways for the past 2 months. So all in all, not the greatest looking chart, but it's getting stronger and stronger and stronger. All right. So for me, since I need to wrap this up, tomorrow, no show. I will be on the road again, Vegas on Friday, and then I will be back for a Monday show. Daniel, thank you for the question today. I hope you guys enjoyed that one. Just, I don't know. I guess if anything, it's kind of thinking, how does another trader think? How does their mindset work? And you don't have to agree with me on how to build out that tariff portfolio. My job is not to convince you of anything other than think differently and maybe look at more planned, structured approaches to these financial markets. So I thank you for that question. It was a good one. What do you guys have? Tariff? Tariff's your friend? Exactly. Tariff. Keep going. What did I see? I saw my name pop in here. Merlin coin will be gone. No, it won't be. I'll have the Merlin coin. I'll probably give the Merlin coin away as just for fun. I have the Trader Merlin coin. I've got Merlin. I've got all kinds of different coins. But I don't sell them. There's no monetary aspect. Margaret says, don't gamble. I don't gamble at all. I speculate, and I will be doing a lot of speculation at the blackjack table. That's my game. All right. Thanks, guys. Nothing till Monday. Sorry, you guys will have to go back to your XLTs at Trading Academy and be entertaining in there. So thank you guys so much. Sorry I'm taking 2 days off, but, gotta have some fun along the way. Hope you enjoyed and learned something today. If you have comments or things you want me to cover on Monday's show, again, this show is driven from viewer questions. So if you're like Daniel and you have something curious in your mind, let me know. Email me at tradermerlin@gmail.com. I'll do my best to throw it into a show and make a whole topic about it. So thank you guys so much. Have a fantastic weekend. I hope the next couple days are great for you. I will be trading from the road on Friday, that's for sure. So thanks, guys, and I will see you all on Monday.